Welcome back, Alpha Hunters. So the market is closed for the week of June the 24th, and we did have a 4-day trading week this week. I totally forgot that Monday we were not going to be trading, as it was the first time the U.S. markets were celebrating the Juneteenth, now new 1-year-old federal holiday. So hopefully you got in some good relaxation, spent some time with the family, friends, maybe even got in some barbecuing. But let's talk about what went on this week. So not much on the news front kind of came out this week. It was pretty quiet. We just had really strong bullish action, okay? Tuesday, we opened up pretty good, just traded a little bit higher. But I thought Wednesday was a very key indicator for what we can expect from the market going forward. And then Thursday, we just had a little bit of a gap up, traded lower, and then ended the day kind of bullish. And then Friday, we just saw strong gap and then buying throughout the day. So let's go to an intraday chart. We kind of just talk about it. So like I said, Tuesday, we had a pretty strong gap up, and then we just kind of hung out in the zone. Now, the interesting thing was Wednesday. We gapped down below Tuesday. Now, this is a gap and go, but it got bought up immediately. In the first hour, we were back to pretty much where we were on Tuesday, and actually took out Tuesday's high, but just kind of hung out the rest of the day, even went a little bit higher into the afternoon. So that was kind of a clear indication that any kind of dips were going to get bought up, and then we even saw that later on in Thursday, midday Thursday, as we kind of sold down. They got bought up and ended the day kind of strong. And then Friday, obviously we saw a really strong gap up, strong buying in the first 45 minutes also. And it was just quiet for most of the day until the last roughly 45 minutes, especially that last 15 minutes where we saw strong thrust higher. So I wouldn't expect too much bullishness maybe on Monday, Tuesday. I would expect the market kind of settle out a little bit, because that was a lot of strong bullish activity there on Friday. So I'd just expect the market to settle out a little bit, but you can probably expect to see some continuation back higher. So as you guys mostly know, I'm not really looking to get too directional with our current place in the market. I just kind of figured this is going to be the zone where there's just not too much structure from the previous bull run. You know, we didn't have a consolidation period like we did here, but we just kind of trickled up all through this area, and we didn't really have any significant kind of pullbacks until we got to this area. So I wasn't really digging being anywhere directional in this zone, which is why I labeled it that last week. Like, this is just my non-directional zone. I don't know if we get back up into this yellow box, orange box area, then I definitely see some bearish plays start to set up. But if we don't get back up into that zone, I'm just gonna wait for the green zone. But I think this whole move down was really one move, you know, that really started around, when was that? That was, you know, March 29th. All the way down. I think this was really all one move. I actually did make a call out to this last week. I thought we were putting in a 5-count wave down. We actually did wind up going a little bit lower last Thursday from the Fed talk, that I didn't really understand why the market had kind of dropped down that much after the Fed talk. I thought it was a little bit overdone, a little bit overextended, and it made sense to just kind of buy that up. It does seem like we're probably putting a five count wave down for Elliott wave fans out there. So I would definitely look to see some more bullish retest. And I don't really know how far we kind of get. The higher we get, the more I'm going to be licking my chops on some bearish plays. The first zone will be this 400 without a doubt. This will be a very key level to retest. The next one after that is going to be this mid 14 area, the 415, the 416 type area where this line is, because we failed there before, and we also bounced there back in March. So that would be a very key level as well. But if we get over that, the next one's going to be this 430. The next one will be the 430 area, 429. And I do think we'll probably wind up getting there, kind of back to where I was originally thinking we were going to get to a couple of weeks ago. Was going to be up in this low 430 area to mid 430 area before we did get the rollover. But then this action kind of happened as we went to a 5-count wave down, that I kind of just misplayed it. You know, is what it is. The market does what it wants to do. But I am looking for that. I do think if we do get back to this 430 area, I think we'll pop up over it for maybe a day or two, kind of like how we did here back in March, April. We got above this double top right here for maybe like a day or two, and then it rolled over. So I'm definitely going to be looking for something like that. But as we break above this 430, I will definitely be very strongly looking for the bearish play. Okay, so if you are looking for a way to kind of play this as we go a little bit higher, you could definitely try to play bearish off this 400, make some sense. Layering in some more at 415 makes some more sense, but if it gets back up to that 430 area, I definitely think layering in some more there makes a lot more sense. And you can break up your positioning into like a third, a third, a third. You know, as it gets to 400, you put a third of a position on. You know, it gets to 415, you put another third of a position on. It gets to 430, you put another third of a position on for bearish play. Okay. The other thing is you can actually just wait. Maybe you do a half at 415, half at 430, you know, something like that. So you can definitely kind of come up with your own plan for what you want to do here on the market. But I do think that would be a good time to start putting on some hedges for portfolios and stuff like that. I think we are going to get that retest or that bear market rally here. So what about like the Qs? Okay, so the Qs, well, what we can see on the Qs is they are going to probably coincide a lot with the SPY. We do know that they'll trade in tandem. The Qs are just going to be a little bit more volatile, as they typically are. They usually lead to the upside. They also typically lead to the downside. So with that being said, well, where can we kind of expect the Qs to get back to? Well, in this trend down, well, they got back to about the 0.618 area of a retest, almost there, but it got a little bit below it. But this little consolidation spot, which is very similar to where the SPY kind of consolidated, we might get a little bit above that. I would expect the Qs actually to get above it, and that will be something that I'll do kind of watch. If the Qs do get above this zone right here, which on the Qs it's around the 330 level, on the SPY it's around that 430 level. If the Qs get above that zone and the SPY doesn't, I might be looking to start getting into those bearish positions. If the SPY gets above it and the Qs don't, I'll probably start looking to get bearish. Okay, so it's just going to depend. One of them probably gets above, the other one probably doesn't. It's just kind of the way these two pairings kind of work. You know, one usually breaks down, the other one typically doesn't, that kind of thing, or breaks certain levels, the other one doesn't. So that's just something I'll be watching. Now, last week talked a little bit about crypto and stuff like that. The other thing about crypto is there's stocks that are highly tied to crypto. And one thing that I've been kind of meaning to talk about was Coinbase. This is a company that I would say I would just stay away from, okay? As far as a stock and any kind of like long-term investment, I would absolutely just stay away from this. If you want to trade this thing is going to be volatile. I would actually do trade this, but with stock and not option, as the volatility and applied volatility is just going to be really high in the options. It's going to be very difficult to kind of understand really what you're paying for as far as option plays. But Coinbase itself has come out and said that, you know, if they go bankrupt, they're holding all their customers and clients, holding all their assets for their own benefit, that kind of thing. So I would just be very careful on any kind of investment into a company like Coinbase. I would just use it more as a stock trading type of instrument. And I don't really know how this is going to set up, because I do think we're going to see some more lows on the crypto side. So I wouldn't really be touching this too much. But as far as like option plays, I got nothing for you, just because the volatility is just going to be much more unpredictable, and that's going to lead to things that it just doesn't set up well for the risk reward type profiles that we want to look for. One area I did want to talk about last week was energy. Okay, so we're going to look at the energy ETF, XLE. Now, I am not a long-term bull on energy. I am a long-term bear on energy, as we are going to continue to see disruptive areas in the oil and gas industry. And really, it's more of the oil and gas industry that I'm talking about when I talk about energy, because that's more of the traditional mindset of energy, is the old school oil and gas, that kind of thing. I'm not really the biggest bull on those stocks, many of those stocks, as you know, we have seen many aspects of these stocks and this industry seriously underperform the market for much of the past decade and decade and a half, and like 10 to 15 years. I mean, they have not been performing that well at all. They have a lot of competition from outside of their industry. You know, we've seen a lot of solar, more renewables come online over the past 10 to 15 years. And we are probably going to continue to see that. With higher energy prices for oil and gas, we're going to see more production for solar and renewables, wind, all that kind of stuff. So this is an area I would definitely stay away from. And I hope a lot of people were taking it off. If you had been holding positions. We're taking it off back in the late May, early June run up, because this was really just overdone for these kinds of stocks. And one of the things that I've kind of been saying for many years is I would not invest in energy stocks, but they are going to have good tradable pop and rips to the bullish side. If you do get those bullish pops, I would be looking to sell them or just be out of them, look for the bearish play, that kind of thing. I think they are going to continue to kind of just dwindle over time, much like the coal industry has. You know, the coal industry back in the 40s and 50s used to be like the biggest energy producer, right? And it's nowhere near what it used to be back in the day. So really, that's about all I got this week. There wasn't too much craziness kind of going on. We did see a lot of bullish activity though this week, especially with Tuesday's nice market gap up, and then Wednesday's nice buying action from a gap down, and then Friday obviously ending out the week pretty strong. And if we look at a weekly chart, you know, I did point out about this evening star reversal pattern that we did have here. The thing about this evening star reversal pattern is it kind of came further down into this trend. It wasn't at the peak of this trend. If it was like up here at the peak, like kind of like this one, this evening star reversal, now it's not a perfect one because you want to see this bearish candle close below the opening of this candle, of this bullish candle. So I don't think this will hold, and we probably will get above that level, which would be about that 415 level. I do think we'll probably wind up getting above it. But people do notice this, right? They do notice this pattern. That it is on a lot of people's watch list, and a lot of people have been getting really bearish here. I've seen a lot of channels and other people get really bearish here, trying to compare this to the '08, you know, waterfall sell-off that we had for the financial crash. I would definitely not be looking bearish here, okay? Definitely wait till we get up to these higher levels. 415 to 430 would be a little bit more of the sweet spot to be getting bearish. I think we'll probably wait for 430, probably get a little bit above it, and that'd be probably my expectation for what I could see out of the market to get bearish, okay? But I wouldn't really be worrying about too much about anything here. I don't really know how to play this bullish right now. To me, it's just we're still in a wait and see zone. Obviously, any kind of news, we could see it, the market just roll right back over. But I do think we'll see more of a bullish trend over the next few weeks. Now, the interesting thing is when we get to July and we get inflation data in July, it will be interesting to see if we have a shockingly bad inflation data number come out. If it is shockingly bad, we might get back to seeing more selling ahead of what I was expecting into this bull rally that we kind of are starting on. So don't expect the top of this little evening star reversal pattern, that 415 level. If we get up there, don't expect it to hold. I would imagine we probably do trickle up above it, and you'll probably get a lot of people start to say, okay, now we're out of the bearish trend, and you'll probably see a lot of people pile on. We'll get to 430 probably pretty quick and probably hang out. So I'll just wait for now before you potentially want to pick up any bearish positions. You could pick up some bullish positions. I think you're probably okay, just because I think the selling that we've had over the past month and a half is just really overdone. I kind of can't believe that we sold down this much, but it is what it is. The market's going to do what it wants to do, and we just got to do our best to ride the train. That's really all I got. When we start to get up into these levels, I'll definitely be talking more about where I think we can get to on the way back down. But there's three main levels. 400 is going to be the first one, 415 will be the second one, and then that 430 level will be the next one after that. And I do think we probably will get to around that 430 level before we do wind up turning back over. Alrighty, have a great weekend. Take care, Alpha Hunters.